And when you say tax incentive, the first thing that sort of comes to my mind is when somebody contributes into an RRSP today, ideally it's an incentive for you to be able to save towards retirement, but you actually get a much more immediate incentive today, and that's sort of the deduction that we're talking about. Can you elaborate on that a little bit more?
Let's say you're on a top bracket of your taxable bracket, and then you decide to put aside 10,000 of RRSP, and you are at a high bracket, and you're making very high level of income. So what happens is, the minute you decide to put aside 10,000, your taxable income comes down 10,000. So when the taxable income comes down 10,000, your taxes payable will come down by, let's say, 50 to 55%. So you got $5,500 to fund your RRSP purchase as well. So you may want to get your RRSP 10,000, but the tax money is helping you to put aside that money. That's a tax incentive. In other words, the government is giving you 5,500, your out of pocket is 4,500. So that makes up that 10,000. That's the first incentive.
Right on. And it's perfect because usually you can take that money and then you can invest it towards anything else you need, or you can use that money for anything you want at the end of the day, right? Because everybody is keen on making sure there's a refund that sort of comes your way, and RRSP sort of accelerates that part of it. So that's the first incentive where you get sort of an immediate tax bracket or tax break per se.